under the what to take into consideration chapter when trading binary options, of course, types of options offered play an important role. I'm not going into the details regarding the types of options because we did this on the previous part, on the first part, so please check the recordings there and the characteristics. But mainly they are divided into short-term and long-term options. Now, different types of binary options are available to trade, and this addresses the different types of traders out there. For example, there are traders that trade only on the short term, also called scalpers, on an intraday basis, and the purpose of such an approach is to have as many trades as possible on a daily basis, on the premises of going in and out of the market as soon as possible, as quick as possible for a potential payout. The potential payout doesn't need to be let's say big, but small profit being made many times a day. Then you should have a high and a nice return. Now, for these traders, binary options are just the right product because such a short-term need is satisfied by the short-term expiration date binary options offer. 60 seconds options, for example, and binary options with short-term expiration date are recommended for these traders. Then there are traders that trade ranges. You have to take into consideration the fact that markets are consolidating more than 60% of the time and trending the rest. In some markets, consolidation takes even more. Then there are these types of traders that they are playing a specified range. So when you are playing such a specified range, then for this kind of traders, the one-touch binary option is recommended. Why? Because it implies a specific range that the price should hold for a longer period of time, and the chances for a specific price level to be touched are high. Using the one-touch option gives the opportunity for the trader to book some nice profits, even if price is not actually breaking the ranges. So price at the end of the day might not even go into one direction or the other, but just holding the range. But because of the volatility during the day, your one-touch option should give you a nice profit. Now, this type of option comes in handy when trading different patterns price makes, for example, flats or contracting triangles. Why? It is a known fact that flats should have the B wave. Okay, so the flat has a structure of A, B, C, but flats should have the B wave to retrace more than 61.8% out of the previous wave, out of wave A. And then a 5-wave structure should start in the opposite direction. In this case, one-touch option should be bought using the Fibonacci retracement level applied on the previous B wave. Now the same with contraction triangles. Knowing the fact that legs of a triangle retrace more than 70% of the previous leg, then a one-touch option should be bought by the time one leg of a contracting triangle is retracing the above-mentioned level. Anyway, there is one variable that should take into consideration when looking at the type of option you are involved with. This is the time variable. Time should be taken into consideration on all trading strategies, and especially when you are trading binary options, since they are labeled as successful or not, depending on where price is after the expiration time passes. And of course, one of the most important things to consider when trading binary options is the potential payout. This is why you are in trading binary options in the first place. This is the reason why people trade, to have a specific profit at the end of the transactions. Now, the potential payout, or the estimated return, how you want to call it, is one constant when trading binary options. The range for it differs from broker to broker and from one asset class to another. There are brokers offering as much as 95%, like we presented under the broker chapter, payout for specific asset classes and expiring times, and the low can go even into the 60% area. It is an important information when somebody decides to trade binary options because of the fixed return. So basically the reward is well known in advance. Binary options are a financial product that appeals to many traders. When involved in trading, for example, if you are trading the currency market, then the virtual payout is known in advance as well, in the form of the profit in the form of the profit level, yes. But then it comes the psychological factor into the equation, and sometimes this is vital in deciding to cut a trade or not. So when you go on the regular market, on the spot market, for example, on the currency market, and you decide to enter a trade, and your take profit level would be something like, I don't know, 100 pips from the moment that you started that you entered the trade. But during that time, until the 100 pips take profit level is being reached, there are some, let's say, that during that time you may change your mind, you may decide to cut your trade or to take an earlier profit and so on and so forth. Not the same when trading binary option, because the time until expiration is known and the potential payout is known as well. And if you enter a binary option trade, so if you buy an option regardless if it is a call or a put, it is then you are stuck with it until the expiration. So it is only normal that the trader involved in binary options should choose the highest potential payout possible. However, this should not be the only variable to take into consideration, as binary options, even if simple in nature and functionality, should be treated as an individual financial product. Now, as the last thing to take into consideration when trade binary options, that should be the option time frame. This is extremely important because normally this chapter should have been called the option time horizon, not time frame. But based on what I would tell you here, basically you get the picture about the first intention. From my point of view, the very notion of binary option should be associated with short to very short-term trading. This can be done either trading setups on the 1-minute chart, but this is quite a difficult task because the volatility is extremely high on the 1-minute chart, and you have frequently gaps from one candle to another, and these are difficult to control. Or trading based on specific level prices and I don't know, oscillator values. This approach will be treated in more details later in our project here, and we will take a look at one of the most popular and important oscillators available. We will take a look at relative strength index and Williams regression. That being said, the majority of binary options offered are on a short to very short-term basis, referring to the intraday trader or the scalper, usually the trader that doesn't let one regular position on the spot currency markets open too much. So, however, let's say that depending on the time frame that you are analyzing and also on the economic realist or fundamental analysis you are doing, the time horizon to take into consideration may increase from case to case. One example would be if you think of the recent talks regarding the tapering of the quantitative easing program or the stimulus in the United States of America, and the possibility that the tapering of the program, basically the removing of the stimulus, should begin in September. So taking that into consideration, and one may decide to buy an option due to expire after the September FOMC meeting based on the assumptions presented above. This is fundamental analysis, and the trader should use the analysis to actively trade financial markets. On the next subchapter, we'll start taking into consideration fundamental analysis and the factors that should influence your decision. So stay tuned for the next recording, please.